What is going on with homeowners insurance here in the state of California? If you have been in the market to buy a house in the last few months, I'm sure you've realized that there are issues now with getting homes insured, especially homes that are in high wildfire zones or other natural hazard zones. In this video, we're going to give you an update on California homeowners insurance, which carriers have pulled out, why they are pulling out, what the California Fair Plan is all about, and I'm going to give you some helpful tips to make sure that you give yourself the best shot at getting the coverage you need. Hey, this is Jesse with the Columnist Properties here in Santa Cruz County, and I work hard to give you the latest real estate news here in Santa Cruz County and throughout the state of California. If you are in the market for a house, or you're thinking you might be in the market in the foreseeable future, knowledge is power, and the more you know about the process, the better chances you have of getting the house of your dreams. So stay tuned. So what exactly is going on with homeowners insurance? Well, since 2019, 4 of California's largest insurers pulled out of the market or greatly reduced the amount of coverage they were providing, which destabilized the market. Now, in the past few months, we've seen other companies follow suit. So Allstate, State Farm, they have ceased new policies here in California. USAA is also reducing the amount of policies that they're covering in the state of California, and they have changed some policy requirements, such as creating stricter wildfire safety standards. I know that Farmers Insurance, which is considered the most reliable insurance policy provider here in California right now, they are limiting their new policies in California to $7,000 per month. Other smaller companies such as AmGuard, Falls Lake, and Safeco have now removed themselves completely from the market as well. So that begs the question, why are all these companies now making an exodus out of the state of California? That would come down to 3 main reasons, and these reasons are interrelated. And the first reason would be California's Proposition 103, which was passed in 1988. So why is a proposition that was passed in 1988 suddenly having effect? And that is because a compounding effect that these 3 reasons have together. One thing this proposition did is it made it more difficult for insurance providers to raise their rates. In fact, any rate hikes over 7% had to be submitted to California Department of Insurance for approval. This proposition also allows the insured or the representatives to sue these insurance companies if they thought the rate hikes were unreasonable, and they were allowed to seek compensation for any legal cost associated with those lawsuits. Now, with this proposition came a lot of bureaucratic red tape, and the approval process was slowed down sometimes as long as 6 months, effectively causing a rate freeze. That is one of the reasons why it is becoming less and less appealing to insure homeowners in the state of California. The second reason insurance companies are pulling out of the state of California is wildfires. When Proposition 103 was passed, one of the stipulations from that bill was it prevented insurance companies from using future modeling to determine wildfire risk. Also, wildfire risk in the state of California is higher than any other state in the union. In fact, over 2 million homes in the state of California are located in either high or extreme fire risk areas. Add to that the fact that wildfire season is seemingly longer and longer every year. It used to be 2 months. Now some years it looks like we're looking at an upwards of 6 months for our fire season. So California's wildfire risk is increasing. In fact, in just the year 2022, wildfires cost the state of California over $380 million in damage. Now, for reason number 3, and this is a big one, is inflation. From January 2019 to June 2023, the producer price of construction materials increased over 40%. Now, although inflation is cooling, it still presents a very large problem for insurance companies. As natural disasters in the state of California become increasingly frequent, insurance companies are having to pay out on these policies at a more frequent rate. Now add to that construction material costs that are upwards of 40% greater than they were in 2019, and the cost of labor has increased as well. You can see the problem that causes for these insurance companies. So you can see now that you have a perfect storm. You've got Proposition 103 that already makes it hard enough for insurance companies to raise the rates. You've got increased wildfire risk and increased natural disaster risk here in the state of California. And you've got higher inflation, which raises the cost of construction materials. So All of these factors really make it hard for insurance companies to look at the state of California and want to do business here. So what's the long-term situation? I'm sure the state of California will step in at some point and try to make regulations that will keep insurance companies here in the state of California. But as we know, regulations on the free market don't always turn out very well. So the jury's out on what's going to happen, but for now, we have the California Fair Plan, and so let's dive into a little bit about what the California Fair Plan is. Whereas in the past, the California Fair Plan was kind of your last resort provider, now an increasingly large burden is being placed on the California Fair Plan. So what the California Fair Plan is it's not a government-funded or subsidized program. It is actually a syndicate of all the insurance providers who are licensed to provide insurance in the state of California. It has strength in numbers, if you will. So what we're seeing right now in the state of California, if your home is in a high fire risk area, is you will have two policies. You will have your fire portion of the policy, which will be covered by the California Fair Plan, and then your companion policy, which would consist of your flood insurance, your liability insurance, theft, other things like that. That would be provided by someone like Farmers. Now, right now, Farmers Insurance, which is the most reliable and the largest provider still in the state of California right now, they have capped their new policies to $7,000 per month in the state of California, meaning you need to be on the ball. And if you were thinking about buying a home, you need to be talking to your insurance agent as well and be getting your application started for that. It will take between 3 weeks to a month to get that policy finalized, and it is very important you communicate clearly with your agent as you are in the hunt for a home. So one of the important reasons why you need to be communicating early and often with your insurance agent is that some of these companion policies require up to 40% cash down. So the last thing you want to do is to get in contract with a house of your dreams and then find out it is uninsurable because you don't have enough cash down. So make sure before you get into contract, you know what you're dealing with as far as homeowners insurance is involved. Now, if you are searching for a home or you would like help in that process, or you just need a good insurance agent, feel free to reach out. My contact information is in the description below. Thank you for watching this video today. I hope you found value in it. If you did, please show the like button some love and subscribe to stay up to date with more real estate news here in Santa Cruz County and throughout the state of California. Again, this is Jesse Collins with Collins Properties. Until next time, stay awesome.